Let's put the spotlight on the IT space then, because numbers are awaited from the IT major Wipro as well as Infosys. But what is the street penciling in this time around when it comes to the Q4 earnings? Let's go across to my colleague Ansh, who's standing by with all the details. Ansh.
Well, for Q4, revenue in CC terms is expected to decline by 1%, whereas revenue in dollar terms is expected to go down by around 1.4% to $4,868 million. Now, this top line could get impacted from weak seasonality and discretionary spends, also by less number of working days. Also, if you talk about revenue in rupee terms, then that is actually expected to go up by around 1% to 42,198 crore. If you talk about margins, then that is expected to go down by around 80 basis points from 21.3% to 20.51%. And this is mainly due to partial wage hike. Talking about profit, that is expected to go down by around 1.4% to 6,710 crore. Now, if we talk about guidance for FY26, then here we can expect the guidance to be between 2 to 5% in CTC terms, whereas margin is expected to remain unchanged to 20 to 22%. Apart from these numbers, there are 5 key things to watch out for. First is management commentary on demand. Second is US and BFSI segment performance. Third is deal pipeline and Gen AI impact. Fourth is discretionary spend outlook. And fifth is headcount and attrition trends.
All right, so that was the street estimates when it comes to Infosys numbers. But what about Wipro, Ansh? The numbers slated for today, expecting the numbers to be just after the market closes. But help us understand, what is the street penciling in?
Company had guided for a constant currency growth of -1 to +1% for this quarter, and it is expected to be -0.6%, which is well within the guided range. Now, IT service revenue is expected to be at $2,597 million, which is down by 1.2% sequentially, and this is mainly because of weak in manufacturing and some hurdles in European region. However, if we talk about rupee terms, then total revenue is expected to rise by around 1.5% to 22,643 crore. Whereas if we talk about margin, then that is expected to drop by around 20 basis points from 17.5% to 17.3%. Not much, because the wage hike was already absorbed in Q3. If we talk about profit, that is seen at 3,290 crore, which is seeing a decline of 2.3%. Now, apart from this number, there are 4 key things to watch out for. First is commentary on Q1 FY26 guidance, especially the top line growth. Second is any insight on BFSI and discretionary spend. And third is a trend in headcount and attrition, whereas in fourth, we have an update on consulting business. So the bottom line here is that revenue is expected to be within its previous session guided range only, but the main focus here would be management guidance.